Welcome to another episode of Insurance Gone Wild. I'm your host, Dennis Settlemeyer. And once again, my lovely co-host is
Stephanie Lencioni.
Stephanie Lencioni. Waiting for the...
Well, I was trying to like pause and
thought I would
let
not-
it go. And,
Yeah.
you know, I mean, shoot, we're like 26 episodes in. So I thought
know.
maybe.
We've done a lot. We've been doing this for a while now.
Yeah. Or actually, I bet we're probably past that as far as the recording. I mean, I think we've recorded about 137.
Probably.
But what we're actually willing to have released so
That's
far
correct.
is about 12.
There's a big learning. There's a learning curve to this. It's
There
not as
is.
easy as I mean. Fortunately, we don't mind talking, but there's still a learning curve to it, right?
Yeah. Like, for instance, you get sometimes those just automatic, like, yeah. And then I'll watch in the review process. I'm like, God, shut up. Like, stop responding.
You're usually talking about me, but that's okay.
No. That's me sometimes where like you're talking and then I'm in the background. I'm like, yep. Or, and sometimes it's appropriate and it's fine. And then other times it's like, God, shut up.
Well, I know we had, there's one or two that we had to re-record because I would not shut up and let you talk.
Well, but I did the same thing to you and like watching, and you're like, just stop interrupting.
I know.
So, but it's hard in a conversation. It's fine because you can always revisit and do. But in a recording setting, it's obnoxious.
Yeah.
You're like, just for a second.
It's tough. So,
Shut up.
people like the Joe Rogans and things like that, they ask questions and they get quiet and then they wait for their opportunity to respond. But we're Insurance Gone Wild. We don't do that.
Exactly.
We're not Joe Rogan.
We are not Joe Rogan.
We don't want to be Joe Rogan. Well, unless we got that many subscribers.
I mean,
then we're okay
there are
with that.
aspects of Joe
Yes.
Rogan that I'm totally fine with.
Yeah.
But
I'm working on the hair.
you are.
I'm working
You
on
are.
the hair.
Yeah, physically, no, I'm good.
Yeah.
Right? I'm good being me. So I think that's nice.
Yeah.
But financially and follower wise, like I feel like bringing on a little Joe in the house isn't too shabby.
Yeah, that's-
Dude's doing all right.
That's right. And I don't even know if he considers that a side gig because who knows how much he makes off the UFC stuff.
That's true.
He did the first 10, 15, 20 of those. Like he didn't really, they just paid him some little amount.
Really?
He basically did them for free, to be honest with you.
Wasn't that after he did Fear Factor?
Yes.
Yeah. Because I know him from Fear Factor.
Yeah. And he...
By the way, Joe, you want to be a sponsor, you let us know.
That's right.
Because
That's right, Joe.
we're pretty amazing.
That's right, Joe. If anybody knows Joe Rogan, ask him if he wants to be a sponsor. But no, I think I had read that. That he did them basically for almost nothing or nothing. And because they were trying to get it started, he loved UFC so
sport,
much that he's, I'll help you get started.
That's
now,
cool.
He may see this. Let's hope. We're crossing our fingers. He may see this and go, no, that's not true. I got paid. You don't have to tell us how much you got paid.
Right.
But anyway, it's interesting. But today we're still talking about insurance.
We are eventually at some point.
At some point.
I think we will. Yeah.
So, but we're going to talk a little bit more about commercial insurance, which is where I like to play is with the commercial insurance because I don't play with commercial insurance.
Ooh, I like what you did there.
Yeah, it was
funny name, serious coverage.
That's right, yin and yang, right? But yeah, you can't play with commercial insurance because most people, that's their livelihood. And if they have employees, that's their livelihood. So let's try to get something that's good. And I've talked about this many episodes that, we focus on coverage, not cost. And there's a reason for that is because, again, it's most people, it's their livelihood. It is their livelihood.
See, like that, right. That's one of those things I was talking about before. Yeah. Right. Where I could have just shut up and let you just keep talking. But instead, I've now also interrupted the conversation.
And I forgot what we were talking about.
By just saying, right. Yeah, no. It's their livelihood. So it needs to be correct.
It needs to be correct. As correct as we can get it.
Right.
And I see so many that are incorrect. I have one that we didn't win. It's a very large prospect. And they had one property that they wanted insured. And I sent him a quote, which I thought was a great quote. I was like, there's no way that anybody's going to beat this. And evidently somebody did, because what it is they own a building. And in this building, there is a, what do you call it? A storage facility, like a 24-hour store where you can go store your personal stuff. And it's inside, it's all air conditioned and things like that. So the building is what they own. They also own the storage facility, but on the other side of the building is a big retail,
like a retail
company.
mall thing.
No, just a retail company.
Okay.
And it's a very well-known retail company. It's not Walmart, but it's something fairly well-known. Anyway, it's whenever the building should be insured as what they call a lessor's risk.
Okay.
That means they own it and they're leasing it. They're the lessor. They're leasing it to two other entities, even though they own one of the entities.
But you can lease it back.
They are leasing it back to themselves to one of their other LLCs that owns the actual building.
Okay.
So I didn't hear from them. I'm like, hey, just wanted to check to see where we were on this. And they're like, oh, we ended up going with somebody else who specializes with storage facilities. And I went, well, that doesn't make any sense, because yes, it matters what's in there, but that doesn't have anything to do with the fact that you need a lessor's risk policy. The lessor's risk is a policy of its own. And then
they
the
have their own
storage facility
thing.
has their own policy. And then the retail company has their own policy. So I said, can you send it to me? Because I see things written wrong all the time. And did they send it to me? No. That's okay. That's on them. I'm not upset that we lost it, because that's just part of the
well, that was going to be one of the questions, though, is that did we really lose it because they did it the right way and somehow they found a company? Because you have access to a whole lot of companies, but at the same time, there are some where we're not quite big enough to truly be able to get into that market. Right. So
I don't think that was the case. I think
it just
they
doesn't
were
sound
sold.
like,
I think they were sold something that may not work for them. And that's part of what I see a lot.
But if you see the price tag and then you are willfully ignorant because you don't want to go in and start digging deeper, which is why a lot of times people don't send it. Mm-hmm. They don't want it nitpicked, and then they've already made their decision, and nobody wants to be criticized on a decision that they've made.
And I think that's it, because when on those opportunities where I do get to review what they actually got, I will send back something and go, at the end of the day, this is your decision, but here's the problem that you have.
Yeah.
And that's what I would have done here. And I even put in my email, look, you don't have to go with my particular quote, but let me at least put eyes on what you have to make sure that you have what you think you have. But when you tell me, and I put it, but when you say that they specialize in storage facilities, that has little to nothing to do with the type of policy that you needed. And so I didn't say this, but in my mind, I think you got sold.
Automatically a red flag for you.
Yeah. For me, it's a red flag. Yeah. And that happens. It happens. Because they wanted cheap. And they have, in this case, which, we don't focus on cost, focus on coverage. In this case, they can afford cheap. Meaning that if they have a claim, they can afford to pay the claim. However, I don't think they're going to want to pay the claim in this perspective, because the insurance company is probably going to come in and go, yeah, this isn't the right policy. We're denying everything.
Okay. But here's what I would say to anybody out there. And trust me, I am one of those people. I don't want to spend any more on insurance than I absolutely have to. Mm-hmm. Nobody does. Mm-mm. Again, we sell it, but we're consumers too. Mm-hmm. But if you don't, for anybody out there who is so concerned about not spending any more on the policy, they're not going to want to spend anything on a claim.
That's correct.
So it's the same mindset, right? Mm-hmm. Like, I want to save money. Well, how are we saving money?
Yeah.
Again, upfront, you're going to pay it. We always talk about this. You're going to pay it one way or another. If something happens, you're going to end up paying a whole lot more down the line if you didn't do it the right way.
That's right.
But here's one thing.
Happens.
It does. No, absolutely.
I see it.
Yes. Here is one question I have for you. So with home and auto, it's kind of a commodity, pretty much a commodity where it's like, meh, kind of samesies. Obviously, there are some differences, and we talked about that in some other episodes. And there can be significant differences, but all in all, through and through, homeowners, da. And they're pretty standard policies. So the company's policy is the company's policy. There's not a whole lot of adding and subtracting coverages, right? There are staple coverages you can add and subtract, but you're not really...
Correct. There's not as much flexibility.
Exactly. So people may want to, hey, can you beat my homeowner's insurance?
Unless you're with company X who doesn't put any extra coverages on there whatsoever, even the ones that are very important.
Well, correct. But so you've got, hey, I just want to see if you can beat my homeowners. And they redact the premium amount. Right? And they're like, okay, well, I want you to be honest and da. One thing I do want people to understand, for the most part, like, we don't set the prices.
Correct.
Especially home and auto. Like, there's not a negotiation.
Correct.
It is what it is. Like, you plug in the information and it spits it out. We may be able to say, hey, you had an at-fault accident on this record here that actually wasn't. Here's the proof, da. And then they can go and they can update their system. But it is what it is. Commercial is different. And so tell me a little bit about that. Like, you were just saying that you had somebody send you their current policy or quote or whatever it was, and they redacted the premiums. How does that hurt or help you in the process?
Yeah. And there's an argument amongst agents. Is it necessary? Is it not necessary? At the end of the day, it's not 100% necessary to have the premium numbers. But the premium, as a seasoned agent, an experienced agent, tells me a lot, because if I've got somebody with 5 vehicles, 5 trucks, and they're paying $6,000 a year on a commercial auto policy, that tells me, number one, something's not right, because that's way too low. But the other thing that it tells me is that, if this is what they're interested in, they might as well stay where they are. There's no sense of me going through all the hoops and things like that.
But take that away. But go more toward it tells you immediately, is there a red flag, or is there a good chance we're covered correctly?
Well, no, that's what the red flag is, if it's too cheap, then there's something going on there.
And I would say conversely, if it's too expensive, you're like, whoa, you're getting taken somehow. Like, what random coverages have we added on? Or what do I not know about the business that you maybe shared with your current agent that I don't yet know about?
Yeah. And it could just be that they haven't been shopped.
And it could be that. So, but that would be, but that's still a red flag though. Like, wow, this is like obscenely higher than what it should be based on what I know about your business. Yeah. So it gives you a piece of the puzzle. Yeah.
I mean, commercial auto now is not what it was. So now you're looking at probably, for full coverage, $4,000 a year per vehicle. If you have full coverage per vehicle per year, it gets expensive, really. It also depends on how you're classified. That's the other thing that it will throw me into. If I look at something, I go, man, I know what they do. That's pretty cheap. And then I start digging deeper and I find out they weren't classified correctly. That's a big deal. So the premiums tell me how deep to dig into their current policy so that I can explain to them if they have issues. But if I don't know those premiums and I'm just shooting and trying to match coverage for coverage, well, I can do that all day long and get you something, I could quote it through 10 companies and present you to the cheapest one. But that may not be the right policy for you. You know what I'm saying? Because my cheapest one may be 10,000 more, but you weren't classified correct to begin with. So here's for instance, if you're driving a truck and you're driving a truck that hauls sand and gravel, big truck, big diesel with the big long trailers that haul sand and gravel, those are expensive to insure. Very expensive to insure.
They're expensive vehicles to begin with.
Well, they're expensive, but they're just, the liability on them is very, very high.
Yes.
You're talking $15,000, $20,000 per truck. But if somebody sends me one and it's 9,000, immediately flags go up. Well, wait a minute. How were they? I know that company. How were they classified? Oh, well, guess what? That company doesn't write sand and gravel trucks. You got a problem. Or that company, or they write sand and gravel, but you were classified as a contractor. Well, that's not the same thing. And the insurance company may not catch it until there's a claim. And that's when the claims adjuster goes, home company, we got a problem. This all happens behind the scenes. The client doesn't even hears about this until later, but the adjuster contacts underwriting. He contacts his claim supervisor, who eventually ends up contacting underwriting and goes, hey, we got a problem. This agent wrote this incorrectly. What are we going to do? Well, what do you think insurance companies are going to do at that point with the claim?
I will say most of them at that point, I know that we would try to find coverage. With a commercial policy to protect your insured if something like that happened. Now, if it's a liability claim is what I would say. From like if it's just a property claim or it's against just the vehicle or maybe lost inventory or whatever the case is, they probably would be like, you did this one wrong, blah, blah, blah. But if there's a liability claim in the event of whatever mishap has gone on, I would tell you, I would bet 90% of them would try to find coverage for it.
So let's say that they would try to find coverage.
At least we would. I mean, that was...
Let's say they try to find coverage. Things are changing. But let's say they did try to find coverage and they pay it. What is the insurance company going to do at that point? Do you know? What did you used to do if you had run into that issue? Anything?
It was above my pay grade.
Above you? Okay, so here's what happens.
The after effect, they would either change the policy and reflect the accurate premium, right?
That would be one thing they would do.
Or B,
they probably
immediate.
would non-renew it at that point.
Yeah, I was going to say B, like cancellation, non-renew. But it's either an adjustment saying, hey, love that for you. Because that's what they'll do with homeowners. If they come out and they're like, this roof is actually a different type of shingle than you had on here, and then they'll adjust the premium, which is usually, in that case, something super, super minor.
On homes, yeah.
And not a big deal. But so that's what I would assume.
All right. So,
but again, above my pay grade.
Here's what would happen. Here's what happens is they will, let's say they pay the claim.
Sure. Kudos.
Then they're calling the agent.
Oh, it could be an Eno.
There you go.
No,
errors
for sure.
and omissions.
But I'm talking about, I was speaking.
Level 3, probably errors or level 1, however they do it. I don't know if they go
I don't know
higher
how
or
to do the
lower.
burns, right? Like.
But anyway, they would.
The burn, like first degree, third degree, which is worse.
Something like that.
Still don't know which is worse.
They would go back to the agent. There would be an investigation. Heck, they might even come out and sit across the desk from the agent with a lawyer, with one of their company lawyers. I've never had that happen, but now agents that have had that happen and ask, why did you write it this way? And so the agent gets grilled. And then eventually it'll probably be an E&O claim against the agent for reimbursement back to the company.
Right.
And so I don't want that. And I don't want to take a chance on the company not paying something because we wrote it incorrectly. So going back to your original question, is premium important? Yes, knowing the premium is an important aspect of what it is. Again, commercial is different because sometimes we get into situations, I've had them this year, where the underwriter who's setting the premium goes, well, what do we need to be at in order to win this? Well, you need to be at, and I always lowball them a little bit, not a lot. It's got to be close. I lowball them a little bit, and I'm like, well, we need to have this number. And if they want it, they'll get to that number.
Yeah.
But if I don't know what number we're shooting for, I can't give them anything.
Right.
I can say, just give me the lowest you can. Well, what's that mean?
Yeah. Then
they're just going to go, here you go. And so commercial's different. Sometimes you can negotiate it with the underwriters depending on how much they want it, because we may get with a company that really, really likes that type of business. But their computer program said, this is the premium. The underwriter can go in and massage it, give it what they call credits, which brings the premium down. And so that's why it's important for us to know what the premium is on the commercial side for their current policy. Do we have control? Ultimately, no, we don't have control over what we quote or what the quote ends up being, but we can sometimes negotiate.
Right. It only goes in our favor from there.
Yeah.
And in the client's, the
That's
insured's
right.
favor.
That's right.
And then that's something else. We're getting paid a small percentage of the overall premium. So if people go into it and they're like, wow, you're going to make more off of me if you know what this is and da 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 da. Mm-hmm. Okay, we're going to make more off of you by earning your business.
Correct.
So that's how we make the most off of you, is by actually having you become a client.
Correct.
And showing you value. So that's first and foremost. And then secondly, it takes so much money for it to even make a dent in what we are even going to.
Correct.
$10,000 for us to make an extra $1,000?
Around an extra $1,000? Yeah.
About that.
I don't care.
We don't care. We don't care. So if an extra $1,500, $2,000 off because you got credits that we could help you with, that's straight money out of your pocket.
Correct.
That's a good thing for everybody. So anyway, just having the conversation of we're not trying to beef up premiums to beef up our income and beef up our profits and everything else. Again, we beef up our profits by gaining more clients, taking care of those clients, retaining those clients.
Yeah, we make ours off volume. That's how we make money off volume. We don't make a lot off each individual policy. And
we're not plumbers. We don't get to set our own rate.
Correct.
So.
Correct. But yeah, having a copy of the policy is very, very beneficial with the premiums, but a copy of the policy gives us an opportunity also to review what your current coverages are. I want to see what those line item coverages are. Then I want to know what those endorsements and exclusions are. Those are things that change the policy, endorsements and exclusions. And those are very, very important, because if you're a contractor, you're going to need endorsements to add. You're going to have a contract at some point that says the company you're working under wants to be added on as an additional insured. Well, if you've got, and I'm going to get a little in the weeds just for a minute. If you have a CG, this is an endorsement. It's called a CG, Commercial General Liability, CGL sometimes. It's a form. It's called a CG 2010. Or a CG 2037, those allow you to add on others in a blanket way. So you don't have to add each person that says you got to put me on as additional insured per request. It's what they call a blanket. It just blankets everybody that requests it, as long as that request is in writing. Okay. It has to be in a written contract. You can't just ask me, hey, Dennis, add me on as an additional insured onto your policy. That doesn't work. You have to say, Dennis, in my contract, it's requiring you to put me on as an additional insured onto your policy. And that's where a lot of commercial businesses, they don't understand that. If they just send me stuff, hey, I need you to add this on. I need you to send me a certificate of insurance with them listed on. I'm like, okay, or they just want a copy of your policy listed in their name, listed in the certificate holder as just a holder of the certificate, or do they want to be added on as an additional insured? That's two different things and I need to know those sort of things. And having those commercial declaration pages from your current policy tells me where you are in regards to that. Because if you don't have a CG 2010 or similar, or a CG 2037 or similar, and you've been getting certificates of insurance from somebody, that tells me those people that are requesting you to be added on as additional insured are actually not added on as additional insured. Because the CG 2010 and the CG 2037 are not on your policy. So it's not blanket. You have it, they're not covered.
I feel like that was said backwards, but maybe
No. If you don't have one of those endorsements on your policy.
Oh, I thought you were saying if you did, then they weren't covered. But yeah, no, if you don't have it,
they're not covered.
Correct.
You can send out certificates all day long stating they are, but if you don't have endorsements with a blanket coverage on there, and you have an actual contract that states they have to be added on there is no coverage. Now, What difference does that make? Well, it doesn't make any difference until there's a lawsuit.
Unless there's a claim,
And a claim. Then it makes a difference.
Then it matters. Nothing. Here's the thing. Shit coverage doesn't matter.
That's right.
If you've never had a claim.
That's right. That's right.
But it matters when you have the claim.
That's right.
So, yeah, we don't have insurance. It's one of those things. It's like you hope to never use it.
Yep.
Although sometimes I'm still like praying for a hailstorm. It keeps like the seas keep parting right over our neighborhood.
Yeah.
Tornadoes taking out like the same roofing building twice within 4 months. Rip the metal roof off.
Yeah.
Anyway, 2 miles from the house, but do we get hit at all?
Yeah.
No. But anyway, but yeah, typically like insurance is there for the what if.
Yep.
So you have a bad policy, you never have a loss, you're good.
Yep. It doesn't matter what you have. You pay $1 a year for a piece of paper. That's fine.
Yeah.
Doesn't matter.
But the key is we don't know when it's going to happen.
Don't know
because if we did, we'd probably do something to avoid it.
So we've got to look at those things. And there's a lot of other endorsements that I won't get into, but there are specific endorsements on the policies that you really need, or they're on there and you don't want them. There is a particular endorsement. It is my mind just went blank because there's so many numbers. But basically, I think I may have talked about this in one of the other episodes recently that we recorded. It removes all liability coverage. The policy says you have liability, but the endorsement says all liability is removed. All comprehensive liability is removed. And so, I'm looking at that going,
why would that even be an endorsement ever?
I've only seen it twice in my life, but I saw it recently on a company that specifically is for real small businesses.
Yeah, I'm going to tell you again,
and I questioned them about it, and they're like, we'll get with our underwriting department, get back to you. It's been 3 weeks. They're not getting back to you.
They're not getting back to you.
No, they know what they were doing. So
that goes back to a previous conversation as well about that. To me is, in my opinion, just acting in bad faith.
Bad faith.
Why do you even have an endorsement that removes? I don't have a problem like removing, hey, here's kind of our cookie cutter policy for this type of business, but you guys don't do anything with used tires. So if it's built into this, we're just going to take the used tire part out.
Exclude it, yeah.
Because you don't need it.
Or even if they do use tires, they may still exclude used tires. That's a hard one to insure.
Oh, I'm making anything up, right?
No, I get it.
But a staple policy, here's kind of your cookie cutter, and then you take a couple of the sprinkles out because you don't do it, or you know that you can just self-insure that risk because it's so minor or whatever the case is.
That's it.
And that's fine. Liability, to be able to add something to completely remove liability, that is acting in bad faith. Because I'm going to tell you also, your standard insured, even if they're super smart people and everything else, and they're business owners and they know their business and they're not insurance people.
No.
So you tell them something and then they can just like flippantly be like, oh, hey, yeah, so by the way, this is just, it's going to save you some money and blah, blah, blah. And you're probably not going to get ever sued anyway. And it's no big deal. And they're like, oh, okay, cool. Save money. Sign.
Yeah.
Bad faith.
Yeah. This one was half the price of the lowest one that I found. And I was like, well, no wonder.
Well, no wonder.
Yeah.
That fries my fanny.
Yeah, it was. I called them. I'm like, this isn't right. How do you guys get by with this?
I think chaps my ass is going to be my new favorite term on this show.
Whatever works.
Because that chaps my ass.
They make a salve for that,
Yeah, well, that's all right. Speaking of ass and chaps, but my aunt, I'll say this and then we'll wrap it up because we're about time anyway. And I think you've finished a thought, or at least I'll force you to finish that thought. But she's like, after 40, you shouldn't wear sleeveless. Like, women shouldn't wear sleeveless. She's like, I would rather wear assless chaps than sleeveless shirt.
Like wearing corduroy,
and I was like, that's awesome.
Corduroy before, what is it, October?
So thanks, Aunt Leslie.
Yeah.
What's that? But yeah, no. anyway.
Wow. Wow.
So anyway, so I think our next family reunion, we're all going to have assless chaps on.
Well.
So welcome to the family, folks.
Invite me.
Yeah. No, and we won't, by the way. But,
okay. All right.
But it could be fun. Anyway, so we'll put at least a pin in any further information.
Yeah, that is
but
something.
We'll wrap it up.
I'll just wrap it up. That it's something you have to be very, very careful about with a commercial policy. Is if it sounds too good to be true, it probably is too good to be true.
Yeah, and I'm going to go a step further and just say, as much as the beautiful thing about commercial is that they are flexible. Mm-hmm. So that is, but everything has a, what is it? For every action, there's an equal and
opposite reaction.
So as much as you can beef it up and the flexibility can make it a super strong, awesome policy, equally, there are ways to weaken what could have been a very good policy.
Yep.
So you just have to be careful about that.
Yep.
And then have somebody that you trust to review it. And if you don't have anybody that you really know or trust, let's say that you call Panatella and you're talking to Dennis, you don't really know him, to trust him, whatever. And that's fine.
I get it.
That's fine. But talk to somebody else though, and then just listen to the different conversations. And usually people can sniff out the crap. So if you don't have anyone that you're just like, I just trust this guy.
Yeah.
Fine. Talk to 2 or 3 and say, hey, I want you to why don't you see what you can do? And then again, you'll sniff out the BS. If you're looking for a good policy, if you're just looking for price, then shop away and don't call us. We're busy. We're busy.
I have had that said to me many times. I can't even tell you how many times over the years of nobody's ever explained it to us like that. I'm like, well, what are you about your current agent? Oh, they just gave us the price and the policy. Okay. Well, you don't know what it covers. Don't have a clue. All right. Well, let me tell you what it covers.
Yeah.
And then we go into it. They're like, oh, what do we got to do to go with you?
Sign here, press hard.
Sign here, press hard type thing. But anyway, that's it. So if you have questions, if you're a contractor, or let me back up, if you're a commercial, if you have a commercial policy or you own a business, it's very, very important that you sit down with your agent and go over, hey, what if this, what if that? Now, as agents, we can't answer all the what if questions, but we should be able to read the policy, at least say, well, it looks like you're going to have coverage here for that. But when you get into claims, there's so many different variables that can happen with claims, and it's very seldom ever cut and dry. Even what you think is cut and dry, it's always not. All we can do is try to set you up in the best possible position to have the best possible experience during a claims policy during a claims process. And that is really the key for us right there, is trying to get you where you're happy at the end of it, the process. So anyway, if you have questions, reach out to us at contact@igwpodcast.com or give us a call at 817-753-0093. Thank you so much, and we'll talk again.